How's it going, everybody? My name's Antonio, and you're about to watch or listen to a conversation that is general and impersonal in nature, one that is going to be biased, since we're probably going to be talking about companies that both me and the interviewee own. And it's also going to be a conversation full of forward-looking statements and big hopes. So proceed at your own risk. Mr. Cook, thank you for investing your time in me, sir.
Yeah, glad to meet you.
Yeah, right back at you. I've been reading your stuff for a while now, trying to learn from you, watching some of the interviews that you've been doing online. So I'm also thankful for Lobo Tigre, who put us in touch. And I know who you are, but this is sort of the first time that that you're on the channel, basically. And every new to the channel face gets the same first question, which is, who are you and why do you think you're worth listening to?
First question's easy. Second, not so much. Um, yeah, well, I'm an economic geologist. I've been in the industry for close to 35, 38 years now. I'm obviously an American. I've worked in somewhere in the order of 60 countries until 1997. I worked as an advisor or consultant for the most part to major mining companies and some juniors, everything from grassroots exploration and generative work right through to bank studies, audits, that sort of thing. In 97, I met up with Rick Rule and was his analyst for about 4 years. Then I went independent again, once again advising major mining companies. Got to know a lot of the newsletter writers that way. In 2008, I bought out Paul Van Eden's newsletter, which was an investment letter focused on, gold mining, but more of a macro economic bent to it. Changed it over to Exploration Insights, where we're focused on basically what I was buying, selling, and seeing with my own money. It was a paid subscription. No one funded me, if you will. I just made money off subscribers and my own investments. I sold that to Joe Mazumdar in about 2016 or so. And I'm still involved with Joe in Exploration Insights. And Joe is an excellent, probably one of the best economic geologists I've worked with. And since then, I advise a few funds, work with a few companies, and spend my time doing what I want.
Very cool. It's I was first of all, I was thinking about asking you for some dirt on Rick Rowe, meeting him that early on in his career. But also, I'm just wondering, buying and selling these newsletter. That's interesting to me, because oftentimes a newsletter is based around one particular person. How does that how does that work? And if you don't mind sharing how much you paid for yours in 2008, how much does a newsletter cost?
Wow. Um, well, I did a different sort of deal with Joe, but I was offered $1 million for the letter in 2000, and I guess it was 15 or so, by the Stansberry Group, which I
Mm.
declined. I'd spent time in the field with Joe Mazumdar and really liked the way he thought, and I wanted to keep Exploration Insights as it was, as an independent technical letter. And so Joe sort of bought in over time, and I've just retained what, royalty or in the company. So that's how I'm getting paid back, is I own a piece of the letter.
Nice.
But it's his letter. He does what he wants. But we speak probably 2 or 3 times a week, evaluate companies and that sort of thing.
Nice. Very interesting. Yeah, it's an
Yeah, it's
interesting.
been great because after a while, every Sunday I had to put something out, plus alerts and comments. And after a while, it gets hard to think of new things to say.
It's true. It's true. That's why I have a weekly video newsletter that goes out for free on YouTube. It goes out for free because it's mostly worthless, but it's a summary of the news and of what happened in last week too, because that you never run out of things to say. And I also invite people who want to sell newsletters to give their opinion too, so they never run out of things to say either. I'm wondering though if we could get a little bit more specific as to what your track record has been over these almost 40 years. I mean, talk to me however way you like. I mean, if you want to stick an average CAGR to it, that'd be great, but I guess that'd be a little hard to do. But you can also talk to me in terms of, big successes, but also big failures or something along those lines.
Well, I've done well. I've been fortunate. I learned a lot from Rick. I came into Rick's, as an analyst, not really understanding the equity side of things. And so that was a hard lesson, but, cost me a lot, but I've learned a lot from it. The track record of Exploration Insights is on the website. It's all fully there. I can't come to think of, but we've had really good years and some really bad years. I think our worst year, we were down 25 to 30% on the total portfolio. Our best year was in the order of 170% on the portfolio. Individual stocks, we've had 1,000+ gainers, and we've had some that have gone almost to zero. When you're looking at junior exploration stocks, it's extremely high risk. The key, and I'm a very cautious person, so is Joe. So the key is understanding exactly what the metal exploration target is and evaluating the data as it comes in to see if it fits and confirms the model expectations. And we do a lot of site visits. Pre-COVID, that year we went to 33 projects anywhere in the world. Joe's gone at least once or twice a month now, looking at projects in Finland, Zambia, Australia, Vietnam, Peru. So all over the place. And that's especially in these junior companies that are exploring. You need to get on the ground and see it. And you need to have an economic geologic background to understand what you're seeing. As you've probably learned, a lot of these companies are pretty good on the bullshit. And if you you don't have the geologic background, it's easy to get tricked.
But you're kind of discouraging me here because I've never done a site visit. I don't know if I ever will. I hope I will. And I'm not an economic geologist, and I'm not the brightest of bulbs either. So, could you, as a retail investor, have a checklist of what to look for in a company, or a checklist of what to stay away from? Like, could a retail investor realistically achieve that? What is it, 180% annual return that you mentioned as one of your best years?
Sure. But the key is, you see a lot of companies that start off looking like they're onto something, and the share price, it starts to rise. But given that we know at least 90% of those companies are going to fail, we probably made most of our money on the rise and getting out when we find that fatal flaw, because it may go higher, but it'll collapse. So it's understanding the data as it comes in and finding the fatal flaw, be that geology, metallurgy, jurisdiction, location, that sort of thing. So yes, if a retail investor can do well, I think it's much more important to have an advisor of some sort, be that a letter writer, a broker, a brother, or a family member that understands the industry. But having said that, yeah, there is a checklist. The easiest one is to go to the website. If the website's not any good, it tells you a lot about the company. Look at the news releases. If the news releases don't, say it's a news release on drill results, if it doesn't show a map, sections, and give a detailed explanation of what's going on, Whether you can understand that or not, at least if the data is being presented, they're trying their best to give you the data so that you can understand it. A lot of times the company will just put up, they don't give you the data and the details. That's a red flag right there. Management, of course, are they competent? They know what they're doing. Cash, particularly right now, if a company, in my opinion, doesn't have enough cash to last at least a year and a half, 2 years, and to get some work done, not just survive, there's no point owning it. It's going to be tough to raise money over the next year, I think, particularly the next 6 months. Jurisdiction, is it a good place, bad place? Have they been there before? Watch for companies jump from hot commodity to hot commodity, jumping from gold to lithium to cobalt to uranium to lithium again. If they're jumping around a lot, they're just trying to play the market, jump on what's hot. That's usually a bad sign, and unless you're very, very quick in getting in and getting out. Normally, those sorts of companies are set up such that the early investors get in early and sell to retail as it gets pumped, as the excitement comes in. Yeah, those are things I look for. I think that anyone can look for.
It sounds to me like your strategy might be revolving around getting in at the plateau of the Lassonde curve, and then sort of getting out at the first top right before the company goes in decline, before it gets into production, basically, before it starts building the mine, actually. Because I believe you said in an interview that that's where the majority of the companies fail. And as a shareholder, you don't have to, I guess you don't have to get in love with a company, with a story, and be like, yes, an explorer, they're going to get all the way through production, because chances are against you. You're a stock market investor. You make money when the stock goes up. And sometimes you can make money on bad companies too. That's what Rickroll has been trying to teach me as well. It's getting out at the right point that's important, I guess. So how do you do that? How do you figure out when to sell?
Well, I can think of many instances where I've gone, I've liked the sound of a project, the results, their presentation looks good, and I've gone to visit it, and I can see this is why it's not going to work. I remember one in Colombia, nice drill results. Went there to look at it, and just on top of the hill was a beautiful little white Catholic church. Well, that's not going to work, right? That wasn't in the presentation. Likewise, I've been to projects where the surface sampling, soils and rocks were quite good on this slope of a hill. But I walked down into a canyon beneath that, and I could see that this deposit, instead of being like this, was in fact a thin vein or breccia like this that ran right down the hill. It gave a big footprint, but very narrow. Metallurgy, a lot of times, getting the metal out can get quite difficult. So if you're looking at a oxide gold deposit at surface in Nevada, 0.5 gram per ton works. But I can show you instances where a 30 gram per ton vein deposit in Nevada doesn't work, because the vein itself is narrow and the rock around it is so shattered that your dilution, what I mean by that is the amount of rock that falls in with the good rock, takes your 30 gram deposit down to a 3 gram deposit, and that doesn't work. So it's things like that you've got to watch.
Very interesting that you should mention exactly that last point, because I've recently been I'm heavily invested in uranium right now. I hope we can talk about that too later on. But it's I've been looking in some companies in the Athabasca Basin, and also on the outskirts of the Athabasca Basin, where some people would say, "Oh, it's too low grade for it to work," but maybe the deposit is like 35 meters deep, right under the right under, you just take out the overburden, you can shovel it basically. But what it comes down to essentially is the margin that the company is going to make. So I oftentimes try to ask the most direct question is like, how much money do you have to spend before you can sell that 1 ounce that you're saying is in your grades. And most of the times the managements that I speak to, they try to answer around it. They don't like, I've never had somebody say like, it's $1,200. That's it. And then we sell the gold for $1,900 and that's it. They want to say all in sustaining cost and cash cost and all these things that they just confuse me as a beginner. So I guess, do you agree that the margin matters the most in a project, or is there something else that's more important?
No, you nailed it. Margin. It's not grade. It's margin. How much do you actually make when you're done?
Mm,
And if you throw in sustaining costs, that's important to look at too. I mean, a lot of companies, they'll have a very low cost of production, but every penny they make goes back into keeping the mine going.
mm,
So you're kind of flatlining. That's not good. I mean, in the end, Joe and I's model, I guess, or strategy at Exploration Insights is we want to find or a deposit or a company with a deposit that is so good they don't have to build it, that someone comes in to buy it, a major mining company comes in to buy it. And that is, number one, margin, number two, size, and three, exploration upside.
mm,
Having one deposit with your price is set, so to speak. I mean, you might get a lot for it, but if you got a deposit that's on a huge belt that offers a lot more upside potential, a major mining company can come in and afford to pay more for it with, knowing that they're pretty certain to find additional deposits online.
mm, mm. I'm just thinking of what you previously said. I own a small cafe over here in Belgium, and that's the lesson of the adding the sustaining cost to figuring out your eventual profit. I learned that the hard way, because you figure out that over time you got to buy a new coffee machine, you got to buy a new fridge and whatever, and all that profit could end up going back into the business. That you think like, oh, look at this year, I made that much profit, it's great, and then next year you have to change all of your equipment, for example, and all that
Yeah.
profit goes back into the business. How do you figure that number out for yourself? Because you got to look at the operating expenses, but I mean, where do you even start to figure that out as a retail investor?
Well, I think, if it's a good study, pre-feas or feasibility study, you take those numbers, and with a feasibility study, you're probably within 15% of what it's really going to be. Although recent inflationary
Hmm.
effect, you're going to have to add another 20% plus to the costs, to your input costs, and this work from there. And the thing is, I've seen this is probably the hardest thing for a retail investor is when a company does a preliminary economic study or a pre-feasibility study. How do you check those numbers? How do you know those numbers are right? Because very often they're wrong, and very often the costs are much lower in the study than they are going to be in actuality.
Hmm.
And that's because they put in the wrong mining costs. They assume $2 a ton to mine, where in fact it's going to be $2.50. That makes a big difference. You want to look at strip ratio, meaning how much waste you have to move, how many tons of waste you move to get a ton of ore out. The resource estimate, that's probably the biggest mistake I see. And that takes a lot of work to figure out, and that's not something your average person can do. That's the tough one. And that's where most of the mistakes are made. I mean, you look at a company like Rainy River, the Rainy River deposit.
Hmm.
They've got real problems because I think basically the resource estimate was off. Likewise, Cote Lake, which I think it was IAMGOLD bought. They've got problems because the resource estimate is off. A famous one was Rubicon Minerals up in Ontario. Really screwed up resource estimate. because they didn't understand the structure and didn't drill it tight enough. That's probably the biggest mistake I see.
Resource estimates. It's really tough though, as a retail investor, especially if you're not super experienced. Where do you look? How do you know if a mine is not going to work? How do you know if you also have to keep track of where is the project? It could be on the top of a mountain, and you can never figure that out if you only look at the presentation. So it's tough. It's tough to figure out these things, I guess.
It is very tough. That's why I think if you're really going to get into it, you should have someone you can talk to about it. As I said, a newsletter writer who has the technical background, your broker, assuming they understand it, or relative, someone like that you can say, hey, does this make sense?
What if you want to be independent? Like what if you want to learn how to do this yourself? You want to invest the time, money, and effort to learn how to do that yourself. What do you focus on? Do I have to go to college and learn economic geology, or what do I do?
No, I mean there's some good books out there. Sprott Resources, they're a geologist, ex-analyst, Andy Jackson, put out a whole series that's available on their website on different deposit types. I think that's a great place to start right there. Yeah, go to Sprott Resources.
It's called Ore Deposits 101. It's also available on YouTube. I've gone through that course. It's a free course, 10 parts or something. It's great. And I also recommend it. Yeah.
Yeah. So, I mean, that just by doing that, you're ahead of the crowd.
And that's what it's also about, right? You have to be, Rick Rowe teaches me that you have to be better than your competitors. That concept of seeing other market participants as your competitors, this will be very important to me. So
yeah.
Has your experience, though, in understanding of the economics of mining project, hasn't that pushed you into the conclusion that you shouldn't touch exploration companies, but you should focus on like royalty plays, for example? That does seem like great businesses from a business perspective.
Yeah, they are. I mean, that's the easy play. But your big wins are going to come from exploration success. 3, 5, 10 baggers. That's exploration success. Where someone actually starts off with a concept and a big piece of ground somewhere in the world, puts a drill hole into it, and continues to put good drill holes into it, that takes a stock from 30 cents to $15. That's a good win.
Yeah, that's exactly.
You don't need many of those to make up for all the losses.
That's true. And it's also true, I guess, for royalties, is that they're much easier to understand business models. So you're going to be dealing with more and better informed competition, basically, if you see it that way. So something else that you mentioned, I'm sort of trying to go back to the points that you went through earlier, was the jurisdiction. And in interviews and in presentations that I've watched from you, you oftentimes talk about Australian mining and exploration companies specifically. Most of the investing that I do, though, well, let's call it for what it is. It's gambling, what I'm doing at this point. But my casinos of choice are the TSX and the TSXV when it comes down to mining stocks. But you've been very vocal about ASX stocks, Australian stocks, and you often say those companies are better. But I'm wondering if you have any data to support that. Is there a particular reason why they're that way, or something that I might want to look more in depth into?
Oh, geez. Yeah, I lived in Australia for quite a while, and so did Joe. So I've got a better feel for that market and the people there. And what I see is that there's a much more sophisticated or educated market over there, both retail and the brokers and such, because it's such a much bigger portion of the total stock market there. And it's a commodity driven country to some degree anyway, much more than the US or Canada. So the people that get into it and run these smaller companies, for the most part, if they're not legitimate, if they're the lying or misinforming, that sort of thing, they get taken to the woodshed pretty quick by the Australian market. Australians are pretty tough, tough
Mm,
on people. They don't stand for a lot of misinformation, if you will.
mm,
So that means that the companies coming out of there, for the most part, are more serious in what they're doing. They're not just trying to go from stocks to money. They're trying to go from stocks to a real deposit
mm, mm.
and make their money that way. That's been my experience.
Okay. Is that true for their regulators too, or like are they tougher than the TSX fee?
I believe so, but I can't back that up. If you look at a ASX news release, you'll see, all the verbiage, and then at the end, there's a long checklist of questions that have to be answered about, the sampling density and all this sort of thing. That's not that the Canadians don't have to do.
Hmm.
I think the Canadian regulatory system is pretty weak.
Yeah, but I mean, why I'm asking is because it's much easier if you have someone who's actually on your side as a retail investor, which will be the regulators, and the checklist of questions that you see is sounds like a good thing to me.
Mm-hmm. The
What
one
part?
problem with Australian listed companies is you're a day behind in the news flow.
Hmm.
So if something really good or really bad happens, you're sort of a day behind before you can trade that stock.
You also mentioned that you've been in 60 countries around the globe. That's a lot of countries. What do you, what part of the world do you think is the most prominent right now to look for economic deposits? I mean, if you have to account for um, policies, which are also obviously very important, and mineral potential combined.
I think if I could go exclude, just based on geology, if I can go anywhere to look for a deposit, I'd probably go to Iran or Uzbekistan.
Oh, what are you looking
The
for in Uzbekistan?
geology,
Uranium?
there's uranium and there's copper, gold, that sort of thing.
Mm.
I think it is unexplored. Iran in particular I think there's a lot of stuff open. Actually, Saudi Arabia, that's opening it up. They've got old shield rocks there, so that's got a lot of potential. Um, I mean, the usual places where big mines are now is the place to still go. It just gets harder to find them. The whole um, North and South American Cordillera, parts of Australia. I've been to Japan a couple of times looking at some new targets. That's pretty interesting. Um, the Tethyan Belt over by you, Serbia, Romania
Mm.
is tough. Um, Scandinavia is a great place to be looking. So it's all over the place, really.
Yeah, it sounds like it. But it sounds also to me like there's an inverse correlation between policies and still potential for economic deposits. Because if the policies are really loose, everybody's already there, so the land that's going to be left for exploration potential is going to be, not that much. And if there's a lot of land to be explored, the government doesn't want you to be there doing that. So it's sort of finding that sweet spot of countries that has it all, I guess.
That's a good point. Yeah, that are just opening up, that have been closed for quite a while, is a
Mhm.
good place to be. Yeah,
Yeah.
that's a good point.
Any companies though in Iran or Uzbekistan or some of these exotic
Not there.
jurisdictions?
No, it's not open yet.
No, not open yet. Okay, but
No.
I'll be on the lookout though. Put it in my Google search, whatever screener. Actually, we kind of jumped the gun there though. Well, I guess I did because I was excited to start picking your brain on these things, but I started asking about these specifics right away. We didn't even talk about the market conditions for metal stocks in general, which seem to be awful at the current minute. They also seem to change by the minute. So, but maybe simply to ask it that way, is it time to buy metal stocks right now, or are those as dead as the sentiment on them?
Okay, so that's not my area of specialty, macro environment type things. I mean, I read probably the same things everybody else does, so I've got a view based on the things I read. What I'm doing is it's going to take a lot for me to buy something right now. It's got to be very, very special. I've dumped the ones I owned that weren't doing well or didn't have enough money to continue for at least a year. I'm researching and I've got compiled a list of companies that I'm really interested in, but I'm not buying one of them unless I'm selling out something else. I'm staying basically even in terms of investment. My sense is things are going to get a lot uglier. The big markets, the Dow, NASDAQ, et cetera, I think have a long way to go down. Real estate going down, low markets going down. That all negatively impacts the mining sector and the gold price, all the commodity prices. We've got tax loss sales and starting here pretty quick. That could get pretty brutal. So I'm hoping there's a few things show up in late November, December that I'll buy into then. But right now, it's going to take a lot to get me to buy something.
Hmm. Is it a
How's that
specific?
sound?
It sounds pretty grim if you ask me. Yeah, absolutely. Is it a specific commodity or something? Because actually, a lot of questions there. Because it's going to take a lot for you to buy something. We talk a lot about exploration so far, but exploration is a very capital heavy business, as you said. They burn through cash. Um, and the risk reward is probably negatively tilted because of the increasing inflation and potential for a recession over the near term. So, what are you looking into? What commodities? What kind of companies? You don't have to give me names if you don't feel comfortable, of course. But I'm just wondering what could make it onto a buy list right now?
All right, so that's what I'm thinking is going to happen over the next 6 months. Looking out much further into the future, there is no doubt in my mind that we don't have enough copper, well, most metals, to supply what the world is going to demand. This whole green energy movement is going to take a lot of copper, silver, PGMs, platinum, palladium, that sort of thing, rare earths, uh, even uranium. It's going to take a lot of that looking further out. So that's kind of what I'm thinking is if things do collapse towards end year, that's the time to pick the companies that have the deposits, that have the margin, the size, and enough cash to last them at least a year and a half. That's what I'm going to I'm going to step in and start adding to my portfolio. Now
Oh,
that could change real quick depending on what happens in the world, but that's the way I see it now.
mm, it's true. Long term, it seems like this should work out, and then obviously there's a challenge of the short term. Um, Tough time to be a trader. Better time to be a bag holder like myself. Uh, but you mentioned uranium, and that's interesting to me because I don't hear you mentioning it often. I don't want to say ever. Probably you mention it, but not as much as I not as much so that I can see it. Um, in my eyes, based on my research, what I found so far in the last I want to say 4 years, uranium has an indisputable supply deficit right now as we speak, regardless of a recession or depression, whatever might be in over the short term.
Mm-hmm.
Reactors are going to need to be refilled. Um, there's no capacity in the West to enrich the uranium and all the kind of things. There's a whole list that we can go through. But what are your current thoughts on uranium, Brent?
Right. Well, my first job at a university was looking for uranium in the Colorado Plateau. I worked at a uranium mine and was exploring around it and all through the Colorado Plateau. Um, and I agree. I think uranium is necessary to make the transition from carbon-based energy to alternatives. That it's not going to happen without uranium. And you know better than I, but the tide is turning in Europe, in Japan, US, as to the population's view on nuclear energy. So I agree. It's there. It's needed. It's going to work, assuming we don't have another disaster. The reason I haven't talked about uranium a lot is because there is no shortage of uranium. There's way more uranium than we need out there. It's just a matter of cost to get it out.
Exactly.
At $60, $70, $80, there's lots of uranium that can come online or that's sitting there. So I'm not really into exploration for uranium. I think a company like Energy Fuels that has a processing facility, they know what they're doing. They've got deposits just sitting there waiting for the price to rise. That's the sort of company I would own instead of an uranium exploration company. So we've got plenty of uranium. It's just a matter of the price rising to make those deposits profitable. And it's not that hard to turn on these uranium deposits, as opposed to assuming you've got a porphyry copper deposit in British Columbia that averages, call it 0.3 copper, 0.2 gold. That at that percentage, at that grade, it probably will look economic. But then to put that in production, to catch that upturn is going to take 5 years, 10 years. I mean, it's funny. I had a meeting this week at the precious metal show in Beaver Creek with Mag Silver, which has a fantastic deposit in Mexico.
Yep.
When I was working for Rick Rule at Global in, I think it was 1999 or 2000, I went down there and looked at Mag Silver. At the time, it was just a concept, really good concept. We bought in at 50 cents with a 75-cent half warrant, but it was just an exploration concept. This year in 2022, they finally put it into production. So that's 22 years from walking on the ground to this thing coming into production. And, you've gone through the cycles and et cetera, et cetera. So it takes a long time to find and put a deposit into production.
Well, you say that it's easier for uranium, but what about some of these amazing deposits, like $20,000 rock sitting in the Athabasca Basin for 30, 40 years? Nothing's happening to it. Maybe I'm exaggerating here a little bit, but you know what I mean. The stuff that look economic sitting in the Athabasca Basin for decades upon decades, even through the spikes of the uranium price well into the triple digits. How come are those not coming into production?
Well, okay, so you've got Fission and Next Gen, right, up there in the Athabasca with some nice deposits, right?
Yeah.
Putting one of those production takes time and a lot of money, and it's very complicated. And in my view, you're likely only have one buyer, and that's Cameco. Maybe Rio Tinto, but Cameco. Cameco owns the basin. They shut down mines of those grade when the uranium price dropped. So all those are fantastic deposits. Does Cameco really need to buy them? And Cameco's like a carrier, Air Force carrier or something. It doesn't move very fast. It's a very stodgy organization.
They don't need to buy them, but we in the West might need Fission and Next Gen to actually bring those into production because we want to be independent, in our energy source. And with nuclear capacities expanding, life extensions, new build-outs being announced, and stuff like that, wouldn't we need Western production, US, Canada production, so that we are independent of Kazakhstan, Russia, Uzbekistan, and all the other places? and obviously much more cheaper to mine uranium in the West. So therefore, wouldn't you need higher prices, make it tougher?
Yeah, I think the prices are going up. I agree. The uranium price is going to go up, and it's going to hit that price where all these little guys, Energy Fuels, Uranium Energy, they've got some stuff in Texas. These things can come online pretty quick. Chemical's got a whole back pocket full of deposits that they don't have in production.
Yeah.
So the need to spend billions of dollars buying and developing next gen is not that great in my view. I mean, I could be wrong. Maybe next week chemical pays double for next gen. I don't know, but that's just my view. That's
Five
why I don't
billion
spend a lot
dollar.
of time. It's a lot of money.
Yeah. Yeah, exactly. Would be interesting to see happening though. But you make a good point about these. Might be a question that I might start asking to companies in the basin that always talk about getting taken over is who's got that much money to take you over at the prices that you would want to sell, basically. And CEOs have become very comfortable in their positions being highly paid, and they don't want to sell for pennies on the dollar.
Yep.
So they want to get paid big time, and who's paying if Cameco is not looking for it, if they have their own mines and those mines are not even restarted yet? I think that's a good point. We're almost at the top of the hour here, so let's get a little bit more specific if you feel comfortable with it, and talk about companies that you might like. I actually like making it a bit more interesting, sort of at the end of the conversation, giving a hypothetical scenario of I say, imagine there's someone holding a gun to your head and they tell you to sell all of your stocks, everything that you're holding, and only buy 3 stocks with all that money. And you cannot be, as you mentioned that you are, but you cannot be an insider, director, executive, advisor, whatever to any of those companies. Which 3 companies would you buy?
Okay. Right now, I like a company called Arizona Sonora Copper. They've got a nice medium-sized deposit in Arizona. It ticks the boxes. They own the land. There's no BLM Forest Service to work with. They own the water. There's no water issues, which is a big deal in Arizona. They're drilling out the deposit. The metallurgy is good. It's growing. It's very high grade. For instance, they've been drilling 50 to 300-meter intervals of 1+% copper. It's oxide. And it sits, this is the upper portion, the up-dip portion of Robert Friedland's Ivanhoe Electric Company's Santa Cruz deposit, which sits down below it. That company's being valued $1 billion, and these guys are valued at about 100 million US. I like that. And Rio Tinto just gave them what, 25 million bucks to test a new processing technology that, if it works, puts all the sulfide, which is the deeper stuff, into potentially economic as well.
How come
I like that.
how come nobody did that before? I mean, if you're saying that Robert Friedland's over there, he sort of considered the genius of the space. If it was that good of a play, wouldn't he have picked it up already?
These guys got it first.
Okay. So, but it's not necessarily metallurgically challenged or something as that they need a new technology to be developed or something.
No,
Okay.
it's pretty straightforward. I mean, it's not. There's always, there's warts, of course. You got a bit of a strip. It's going to be underground on most of it, and that sort of thing. But I mean, there are a lot of companies with worse problems.
Yeah.
And looking further out, I think copper is good. Copper in the U.S. is good, and they don't have the jurisdiction, water, or bureaucratic issues that other companies have had in Arizona.
That's a good start. Yeah. I think I had never heard of that company. I'll have to look into it. What's the second one?
Playing the safe side of things, Origin, Orogen.
Mm-hmm.
It's a royalty company. They generate their own properties and then vend them out to companies. They've got a 2% royalty on a silver deposit in Mexico that's generating in the order of what, $2 or $3 million a year to them. They own is it 1%, 1.5%? I have to check. Royalty on Anglo Americans or Anglo Gold's discovery in Nevada, that the silicon, which is 3.4 million ounces and growing. That's going to be worth an awful lot when it goes into production. They've got like how many joint ventures going? I wrote it down because I figured you'd ask. 22. No, I'm sorry. 14 partnerships, joint ventures, and another 3 alliances scattered in Canada, Mexico, and the U.S. And actually, they got one in Africa as well, Tanzania. They're cash flow neutral, meaning all their expenses are covered. So I like that one.
Mm.
I think at some point they merge or are bought out by a larger royalty company.
About that's pretty much what I was going to ask about it. What's the upside there for a retail investor? Because you said you're playing it on the safe side. That's probably not something that you're expecting to 10x over the next 5 years, right?
No, it's a safe one. I don't see a lot of downside. I like the idea of that right now. And looking forward, when Anglo announces what they're going to do on that deposit, it'll be easy to work out what their cash flow is going to be from that,
right.
Which should be substantial.
Right.
Uranium, I'd buy Energy Fuels. I think it gets cheaper though. And I think in the gold space, probably I-80 Gold. Focused on Nevada, well run, a number of projects at near development stage, very high grade stuff. They've made some new discoveries on a silver base metal skarn down in Nevada. It's very good grade. They've got access to, it's the only independently owned facility for processing refractory ore, which is what Carlin deposits are. Well run, good company. If I was an outside company, larger company looking to move into the US and Nevada, I would buy them. That gets you everything. So I guess that's the third one, I-80 Gold.
Oh, you don't think it's going to be the other way around? But what I hear is that Mr. Downey, Ewan Downey, who owns I-80, who runs I-80 Gold, is rumored to be wanting to pick up the other companies along the same trend. What is it? 4 other companies that are over there, that are rumored to be all drilling, holes in the same cheese, basically. You don't think that happens?
I don't know. I mean, he's got a lot on his plate right now. He's got 4 or 5 projects that are taking up a lot of time, a lot of money. So I can't answer that. I don't know.
Brent, this has been great. I don't really have any other questions to add, and I know that you almost have to run here. Is there something that you came hoping to talk about, but I failed to bring up?
Well, probably number one, I think, the newsletter, Exploration Insights, I'd recommend people go there, look at the free articles and see what we've done and, check it out. If you like it, you can subscribe for a month, and it doesn't work, just cancel it. It's a good technical letter run by technical people. That's probably number one.
Okay. Well, I appreciate that. It's also good that you can unsubscribe every month. You don't have to pay for a year. So, thank you for mentioning that, and thank you for investing your time in me, sir.
Yeah, thank you. I appreciate it.